Good afternoon. Welcome back to Market Wrap. I'm Sue Herera. Ted David is on assignment. The bulls took charge on Wall Street today. Stocks moved higher in the early afternoon, bolstered by rising bond prices and computerized buy programs. The Dow finishing the trading session in solid territory of 2609 at 3758.98. We'll have all the numbers for you in just a moment. But first, Bell Atlantic says that it will be spending $11 billion over the next 5 years to get into the cable business. And the big winners, AT&T and General Instrument, will be supplying the fiber optic network that will get the signal there. In Washington, David Andelman takes a look at the newest and the biggest traveler on the information superhighway.
Bell Atlantic's president threw down the gauntlet, serving notice to the nation's video stores and cable companies. He wants their customers, pitching a more advanced, interactive alternative to any service available now.
They will receive a superior package of video programming and video on-demand services, a great alternative to video stores, a great alternative to programming delivered by cable companies.
Initially, the system is envisioned as carrying most programming now on existing cable systems in 6 major East Coast markets. Head-to-head competition beginning early next year, 1 million homes by 1996, and adding 100,000 a month in an 11 million home market from New Jersey to Virginia, more than 10% of the nation. The rationale? Telephone lines run into every home. Telephone lines can carry video. All that's needed is an upgrade of the broader telephone network. The result, according to Bell Atlantic, a sophisticated system way beyond the capacity of existing cable companies.
This is an exciting step forward in bringing to consumers a choice for what we think of as cable TV services today, but what will become two-way broadband interactive services in the near future.
But with cable television systems threatening to get into the telephone business, the cable companies are talking about launching telephone service. So, 2 cable companies and 2 telephone companies in every home?
We would like to see all regulations and all restrictions dropped so that the marketplace will be able to decide from whom they get their cable and entertainment services and from whom they get their local telephone and from whom they get their long-distance services.
David Andelman, CNBC Business News, Washington.
And checking to see how the players in that deal fared today, Bell Atlantic gained 5/8 to 54 3/8. AT&T up 1 3/8 to 56 5/8. General Instruments up 4 1/8 at 59. Broadband Technology bucked the trend. It was down 1/4 at 17. DSC Communications, which lost out on the bidding, finished down 8 3/8 today at 49 3/8. And in other telecommunications news, Intel and General Instrument have signed a deal with TCI and Rogers Cable System of Canada to deliver data to computers at speeds of up to 1,000 times faster than the fastest modem. Shares of Intel finished the trading session up 1 3/16 at 60 1/8, while TCI finished down 5/8 at 19 3/8. The dollar rose against the yen today on reports that the Soros Fund was a major buyer of dollars. In addition, analysts say the U.S. trade talks in Washington may have stirred hope of progress and triggered yen selling. Peter Barnes has the latest from Washington.
Japanese negotiators are trying to jumpstart trade talks with the U.S. with a proposed compromise to open their markets more. Sources close to the Japanese say Tokyo is offering to agree to general sales and market access goals in Japan for American companies. That's if the U.S. will back off demands for specific benchmarks for measuring progress towards any goal. The U.S. was keeping its reaction close to the vest.
I'm not an optimist or a pessimist, I'm a realist.
But do you expect any
we'll see. We'll wait.
We start the negotiations today?
I think we have the patience to wait for a day or a day and a half to see how far we get.
The proposal came as the Commerce Department reported that America's trade deficit with Japan rose to $5.8 billion in March, the 3rd highest deficit on record, and on track for another $60 billion annual deficit. That prompted tough talk from another top official.
We have said unequivocally that a $60 billion trade deficit is unacceptable. Those markets have to be open to American goods, products, and services. There have to be measurable, monitorable results. That continues to be our position.
The Japanese alternative isn't new in the trade talks, but sources say the latest proposal spells out specifics for the first time. The U.S. wants better access in Japan for American telecommunications equipment, medical equipment, financial services, autos, and auto parts. Formal trade talks have been dead since February, when Japan balked at U.S. demands. Now Japan has a weak minority government that probably couldn't implement a major new agreement anyway. Still, sources expect a breakthrough of some kind to get the talks back on track. President Clinton and Japanese Prime Minister Hada are scheduled to go to Italy in July for a G7 summit, and neither of them wants to show up empty-handed. Peter Barnes, CNBC Business News, Washington.
Earlier in the day, there was talk that the Fed would intervene on the dollar's behalf, but that did not happen. Checking prices late in the session, up 3/4 of a yen at 104.21, down just about 1/5 of a pfennig at 165.67, and up better than 1/10 of a cent against the pound sterling at 150.69. Meanwhile, Treasury prices gained as the steady dollar eased concern that overseas investors would sell U.S. assets. Bonds initially fell after a government report showed that imports and exports increased in March. The Commerce Department said the merchandise trade deficit fell to $7.5 billion from a revised $9.2 billion in February. When all was said and done, the 30-year bellwether bond ended the day up 12/30 seconds at 88 1/32. The yield 7.24%. But keeping that market in check, the increase in commodities. The CRB index, a key gauge of inflation, continued its surge after hitting a 3.5-year high yesterday. An increase in cocoa, coffee, cotton, lumber, and oil helped lift the CRB, and it finished the trading session up 145 at 232.43. The firmness in the dollar and bonds helped Wall Street launch a solid advance. Wall Street broke away from bonds at mid-session to post a modest rally, with a number of Dow components posting 1-point-plus gains. The Dow then added on to its advance as bonds gained strength. Dow component Procter & Gamble finished the day unchanged at 56.5. The company will close 3 plants and shut production lines in 4 plants over the next year and a half. 1,000 employees will be affected by that consolidation. Here's a look at the final numbers for you from Wall Street. The Dow up 26.09, 37.58.98. NYSE Composite Average up 143 at 252.16, 305 million shares changing hands. The advancing issues 1,288, declining issues 859, unchanged 651. The average share gained 19 cents. In terms of new highs and new lows, dead even 38 to 38. In terms of the broader-based market averages and the transports, we were up 24.50 on the transports. We were unchanged on the utilities at 184.02. The S&P 500 cash was up 280 at 456.49. The Amex index up 214, 437.04, and the Nasdaq up 542 at 727.32. The labor dispute at Caterpillar Incorporated is closer than ever to a climax tonight. Late today, Caterpillar fired the latest shot, announcing it will not pay group insurance for striking workers. 7,200 Caterpillar workers have been on strike since Monday. The company has already suggested some strikers could be replaced. And as Scott Cohn reports, that has workers and some in Congress doing a slow burn.
With more than half their union workforce now on strike at 3 key plants, Caterpillar officials brought out their silver bullet.
So we are recalling laid-off employees to the extent that they're medically able, and we will be adding some new employees.
In 1992, the threat of hiring permanent replacement workers forced an end to a 5-month strike. The union has been working without a contract ever since. Company officials took pains to say the new hires this time are not permanent replacement workers. But in Washington, backers of legislation to ban permanent replacements were quick to make the connection.
Caterpillar is one of the most respected names in agricultural implements industry, not only in this nation, but throughout the world. And why they would want to jeopardize their good reputation under circumstances such as these.
Because, claims the union, it's an attempt to intimidate.
A similar threat worked like a charm for the company 2 years ago. The union had little choice but to return to work. But workers insist this time will be different.
At this Caterpillar plant in Aurora, Illinois, which isn't on strike, workers say the latest moves by Caterpillar only make them more determined.
It worked once. That was before we were educated.
I've gotten calls from people that actually swore at me on the telephone wanting to be out on strike.
Caterpillar officials say they aren't trying to intimidate anyone, but that they'll do what they must to keep the business running. Many in the union consider that a call to arms, unless Washington comes to their rescue. Scott Cohn, CNBC Business News, Aurora, Illinois.
And shares of Dow component Caterpillar ending the day down 1/4 at 110 1/2. A priest has administered last rites to Jacqueline Kennedy Onassis as relatives gathered at her side. Representative Joseph Kennedy, the son of Robert Kennedy, says that she is very, very sick and it's very sad. The 64-year-old former First Lady is suffering from cancer of the lymph system. She went home to her New York City apartment on Wednesday at her own request after doctors at the New York Hospital Cornell Medical Center said that there was nothing more that they could do for her. On a lighter note, It almost sounds too good to be true. One-stop shopping for a home. Bob Pisani will have all the details when we come back.
Good afternoon, everybody. I'm Neil Cavitto. Here's what we're working on for tonight's edition of Business Insiders. It looks like it's time for a deal or an outright indictment for House Ways and Means Committee boss Dan Rostenkowski. Supposedly, charges of felony abuses could be in the making. That could take him out of the picture, which could mean the Clinton health care plan is up in the air, as well as welfare reform, the House leadership. How messy does all of this potentially get? We'll set the record straight on Business Insiders at 6 p.m. Eastern Time on CNBC.
Every night, it's the best talk coast to coast with Tom Snyder, only on CNBC.
Mortgage rates are on Bob Pisani's mind these days, and here's Bob with this week's real estate report.
Hi, so mostly good news on mortgage rates this week. The national average for a 30-year fixed-rate mortgage dropped more than 1/5 of a point this week to 8.56%. The 15-year also dropped to 8.04%, but the 1-year adjustable-rate mortgage increased very slightly to 5.58%. Now, it's been a rocky 3 months since the Fed began raising short-term interest rates, but the bottom line here is that mortgage lenders are, for the first time, somewhat hopeful that we may have seen the end of this rise in interest rates, at least on the long end. Now, we've seen 30-year mortgage rates rise nearly 2 full points in the past 3 months. That's it for mortgages this week. Now, our guest today is Leslie Gabriel. He's president of the Realty Evaluators in New York City. Pleasure to see you. You are one of the national leaders of what's being called the one-stop shopping movement in real estate. What is that all about?
Well, I'll tell you what it is. It's all about consolidating resources so it makes it easier for buyers and sellers to evaluate the properties that they're either going to purchase or that they're going to sell, so that they don't have to call 4 or 5 or 6 different places in order to find out about the value of the property, the condition of the property, how many liens or judgments there are against the property, or all these different things, the environmental condition. So you have one place to call for everything that you need, making convenience part of real estate for the first time ever.
Now, why is this important? For example, if I'm a consumer, if I'm buying or selling a house, or even if I'm interested in buying or selling real estate as a business, why should I care about the concept of one-stop shopping?
Well, in today's market, it's always and has been for years and years driven by consumers. And one thing that you want to find out is what consumers are looking for is convenience. No longer do they want to play the role of general contractor and bring in all these different services and waste their time on phone calls and making sure everything is being handled. What people are looking for, at least from our research, is that they're looking for one place to go for everything they need. And this is, again, a first in real estate, because real estate is one of the few industries which is still relatively inconvenient.
Yeah, now is this a national trend? Are we seeing one-stop shopping sort of sweeping the country, as it were?
Yeah, and I'll tell you where it all started. It started primarily in relocation services, where in relocation you might have a company relocating from one area of the country to another, with a relocation administrator taking care of the relocation from, let's say, Ohio. And in Ohio, this administrator would have on their list appraisers, engineers, environmental inspectors, property surveyors, municipal search companies, everything you need to know about a property at their fingertips. And it has never been available to the general consumer.
So it's going to be a common feature in the future. People are going to go to one source to get all of their basic real estate needs. This includes buying and selling as well as lenders, I suppose.
Exactly.
Okay.
Exactly.
All right. Thanks very much. Pleasure to have you. Our guest today has been Leslie Gabriel. He is the president of Realty Evaluators in New York City. Back to you, Sue.
Thank you, Bob. Well, if you've always wanted to own Intel or Motorola, is now the right time to dive in? John Murphy takes a look coming up next. the nation's largest public employees pension fund gave his swan song today. Dale Hansen, who's headed the California Public Employees Retirement System for 7 years, known as Calpers. He says that he's leaving for private industry. Hansen leaves behind a legacy as a pioneer in shareholders' rights movements. Kevin McCullough reports.
Calpers, with its $82 billion portfolio and with Hansen at the helm, were pioneers in turning institutional shareholders from passive investors into catalysts for change, a process that helped force out several CEOs and permanently altered the way boards of directors use their power. Now Hansen's leaving to start a private investment firm and make some money, despite mixed feelings.
I think we're all amazed at how fast time goes when you're having fun.
But his departure was not all smiles. Hansen's own board felt obliged to say he wasn't being pushed out. And in a CNBC interview, Hansen himself denied rumors that Calpers, like many on Wall Street, had faced problems with derivatives investments.
In fact, we were joking about that particular story that's going around, that somehow or other Hansen is leaving because he has caused a huge loss in derivatives. That simply is erroneous, as is the fact that I have not found the body of Elvis.
In 7 years, Hansen certainly made his mark. In 1992, Calpers was instrumental in forcing General Motors chairman Robert Stempel to relinquish his power and ultimately step aside. ITT also felt the heat when Calpers complained about its chief executive's compensation. John Lecumnick, who's with New York City's pension fund, says Hansen's gift was to focus shareholder outrage over executive pay.
This guy's making $10 million and we're not making anything. In fact, we're losing money. Why are we paying him? That sort of disparity between the fortunes of the corner office and the fortunes of the owners of the company is Dale's lasting tribute.
A legacy that changed corporate boardrooms. Kevin McCullough, CNBC Business News, New York.
And time now to take a technical look at the market, and some of the key markets that have been moving lately involve the energy complex. John Murphy is here to update us on what's going on in that sector. So, John, oil has been really on the forefront, but gasoline is always back there as well.
Well, oil has been rallying. Sue just recently hit a 6-month high, crude oil, and it was up another 25 cents today, and it's over $18 a barrel. But the products have been fairly quiet. Now, today, for the first time, gasoline, which is now becoming the key component, broke out to the upside as well, setting a 6-month high. Maybe it's coincidence, but the oil stocks turned in a very strong performance today, also looking very strong, and I think there's a connection there. Okay. Let's start there. We'll take a look at the gasoline chart and see what it looks like. This is actually the July gasoline contract that traded on the New York Mercantile Exchange, and as you can see, the price of all the energy complex has been moving up, but over the last week or so, the gasoline market had become a little bit stalled. Now today, the July contract closed up over 80 cents, and this is the first time that we've been above 52 cents, actually since November of last year. So we're trading at a 6-month high, and that appears to be confirming the breakout that we saw in the oil market, the crude oil market, just a couple of weeks ago. That's having a very positive impact on oil stocks, as you would normally expect. And let's overlay on top of this the oil index that we follow, that we quote all day, or as we refer to it as the XOI index. This is it's an option that's traded on the American Stock Exchange. It's a basket of oil stocks, and you'll notice that, in fact, back here in early April, when the price of oil and these oil products started to move up, notice we got very heavy buying in the oil stocks. And today, in particular, with gasoline breaking out and oil back above $18. This index closed up over 3.5 points. It was, on a percentage basis, one of the better performers of the day. And also on a closing basis, we're trading at the highest level in 3 months. And by the way, we're only 5 points away from the all-time high that was set earlier this year. So a lot of money continuing to flow into these energy stocks. And I think the fact that we're beginning to see more and more signs of strength in gasoline and oil certainly helping.
All right, John, what's next? The two semiconductors that you wanted to take a look at. A lot of people think that they've missed the move in Motorola and Intel, but we're at a point where perhaps there might be some room to the upside.
I think if you're looking to put some money back into the sector, this might be the right place to look at it. So the only caveat is you have to keep a very tight stop under the market. little tactics. Let's start with Motorola. We're going back the last 52 weeks, and you notice a little bit of a double top up here, which has been very worrisome. But we pointed out, I guess the last time we looked at this stock, major support in the fourth quarter of last year, down at 42. We pointed out that the stock had to hold there. So far, we have done that. We've actually tested it several times over the last month. We closed up today a full point on pretty good volume. It was on the most actives list, so we are getting some nibbling in here in Motorola. We have to get above 48 to really turn the short-term trend back up again. But the fact that we're holding in this support area is encouraging. It's critically important that we hold in that area. And then another market in the same area, Intel. We'll take a look at this chart as well, but it's basically the same story. 74 major resistance up at 74. We tried it late last year. We tested it again earlier this year. We were not able to get through it. We mentioned the last time we looked at this that 56 would be the key support level. That was simply a retest of the lows that was set during the fourth quarter of last year. And as you can see, we've tested it 3 times over the last month. We closed up a point today, and again, this was on the most actives list among the NASDAQ stocks. So it's very important that we hold in this area. Both Intel and Motorola have come down into some critical support. The point being, if you're looking to nibble, if you want to put a little money into these stocks, this would be the logical place to do it. The only caveat is in the case of Intel, you'd want to have a protective stop under 56, which means if it breaks 56, all bets are off. So if you're going to do it here, you have to do it with a pretty tight stop.
15 seconds. Update on the bond market.
Well, the bond market continues to rally, Sue. I think the next 107 will be the real test of this market. But with the bond market rallying, it's putting some stability under the stock market. We've been talking about 3750 to 3800 in the Dow. It looks like we could get up and test the upper end of that range. But I think the strength in the bond market is certainly helping.
Okay, thanks, John. Okay. See you later. John Murphy, our technical analyst. Well, how can you spruce up your portfolio? Find out on Buy, Sell, or Hold. That's coming up in our next half hour. Plus, investors are looking east for the hottest opportunities, but it's not in the Pacific Rim. Mabel Zhang reports when we come back.
This is CNBC.
Market Wrap continues now. It's 1:30. Welcome back. I'm Sue Herera. Ted David is on assignment. On Wall Street, narrow breath, but heavy volume and a better than 26-point advance in today's session. Some of the action today attributed to tomorrow's expiration of May equity derivatives, that is. Here's a look at the final numbers from Wall Street for you. The Dow Jones Industrial Average up 2609, 3758.98. The NYSE Composite Average up 143 at 252.16. The volume 305 million shares. The advancing issues 1,288, declining issues 859, 651 stocks were unchanged. The transports were up 2450 at 1618.86, and the utilities were unchanged at 184.02. The S&P 500 up 280 at 456.49. The Amex Index up 214 at 437.04, and the Nasdaq up 542 at 727.32. And here's a closer look at activity on the big board in today's session. And taking a look at some stocks making news today, shares of American Health Corp finished down 3 at 7 1/4. The medical services provider says earnings for its fiscal third and fourth quarter will be between 13 and 16 cents a share, below what the street is looking for. Shares of U.S. Healthcare up 2 at 39. Merrill Lynch repeats its near-term, long-term buy, and DLJ adds the company to its recommended list. Shares of Chrysler finishing the trading day up 5/8 at 47 1/8. Chairman Robert J. Eaton told shareholders that that company plans to eliminate its $2.2 billion underfunded pension liability by the end of the year and to boost shareholder dividend to 25 cents a share from 20 cents. President Clinton met today with the Prime Minister of India as the two leaders sought to improve relations by focusing on economic ties. The countries have been at odds over human rights and nuclear proliferation, and differences remain. A growing number of institutional and individual investors believe India could be the hottest economy going into the next century. As Mabel Jong reports, thanks to new funds, foreign portfolio investment in India has grown to $2 billion just in the last few months.
Created in 1878, India's stock exchange is Asia's oldest. And while foreigners have only been allowed to invest there in the last 3 years, foreign portfolio investment has climbed from close to nothing in 1992 to almost $2 billion today, thanks to 3 new closed-end funds that have been around only since February. These funds, which now total 4, are relatively liquid, easy to get information on, diversified, with plenty of room for growth. Strategist Barton Biggs of the Morgan Stanley India Investment Fund feels stocks in India are trading at low prices relative to factors such as earnings per share and asset value. Jeffrey Chowdhury, who manages the India Fund, agrees.
Many people in the West, when they think of India, they think of poverty, they think of low labor costs. That actually isn't the real story. The real story is this economy which is going through a metamorphosis.
A metamorphosis that Chowdhury believes small investors can profit from. He's investing his fund in approximately 1,000 medium-sized companies, primarily in the pharmaceutical and consumer durable goods business.
These are areas which we believe are going to have significant growth going forward over the next 5 to 10 years.
But like any emerging market, India has immediate risks. Inflation runs as high as 11%, and liberalization programs have only been in place since 1991. Investors who think they can put their money in for just a 3 to 6 month horizon will be disappointed.
Investors also need to understand that some of the technical problems that have been in the market during 1992 are being sorted out right now.
That year, there was religious rioting throughout the country. Further friction between the country's Muslims and Hindus could slow or derail the country's economic initiatives. However, promised reform has led companies ranging from General Electric to General Motors to Barclays Bank to believe that India could be the hottest economy going into the next century. Investors here are betting on it. Mabel Jong, CNBC Business News, New York.
Marvel Entertainment, Heinz, and Mylan Labs are just a few of the stocks our buy-seller hold analyst will talk about coming up next. And reaction to a very eerie situation in Cincinnati. We'll explain in Sports View.